With Michael Kantrowitz joining us, Chief Investment Strategist at Piper Sandler. It's like dealer's choice, Michael. You've got Fed, you've got positive China news, you've got continued strong earnings. How would you select sort of the rationale for what's been a pretty good rally for the last 2 months?
Yeah, well, it's been really since early April, pretty explosive rally. Some of the stats.
Well, the first 2 weeks April were pretty explosive on the downside.
Yeah, from the bottom.
From the bottom, yes.
Well, yeah, I think thus far, generally everything's gone right. Many fears have gone away. And I think, something I'm picking up in our work and people are beginning to talk about is for the first time in about 3 years, you're seeing a broad improvement in earnings expectations. And the last few years, the narrowness of the market and even the economy has been obviously something people have talked a lot about. And I think we're beginning to see a healing of that situation, somewhat of a convergence.
If we don't get, I almost don't want to say this, but if we don't get a rate cut on Wednesday, if we get a Jay Powell, it's like, yeah, we're not ready yet. Then what?
I'd be surprised.
I would be surprised too, and the market would be surprised given that it's a 90+% probability. But we don't know what's going to happen. So I'm just at the extreme outlier.
Sure.
What if the Jets actually won a game? That kind of a thing.
Well, the markets wouldn't like that because that would create a lot of uncertainty in a market that clearly is pricing in, I think, 100% odds roughly of a cut.
That's all the odds.
And a couple more. Yeah. That's correct. And the Fed doesn't like to surprise the market. And I think Powell in Jackson Hole talked a lot about the change in the labor data. Okay. So, I think he opened the door and he's going to...
Okay, so let me ask a less dumb question. So let's just assume that we get a rate cut because it's 100% in there. Now the market is betting on how many rate cuts. Do we get a quarter point?
Yeah.
Or do we get a half percentage point? Let's assume it's a quarter. Goldman Sachs is calling for 3 rate cuts. Maybe you guys have the same or more. You let me know. But what if we get a kind of a one-and-done mentality, Michael, in the market? Is that a smarter question? Because then I fear stocks may be at risk.
Agree, because, again, that would be a surprise. And I don't think Powell has given much forward guidance in several meetings because there's a lot of uncertainty.
Okay, being very generous.
Yeah,
yes.
And proven he's been data dependent, though transparent at the same time. So I wouldn't expect them to indicate they're done. I would expect to hear the same thing we've heard from him at the end of pretty much every other meeting is every meeting going forward, we'll evaluate the data and as it changes and we will react if it's necessary.
So we get a slightly less than dovish Fed. Maybe stocks could be a little wobbly because we're told, Michael, that September traditionally, historically, is one of, if not the worst month of the year for stocks. Mm-hmm. And yet all we keep doing is going up.
Yep. Well, seasonality, doesn't entertain the idea of context. So the average, is very negative. There's some big outliers there. However, in periods just like sell and may go away, there's plenty of periods where markets do really well between May and September end. So I think, we have to think about this backdrop today, why the market's going up, will that continue, rather than just take some average of history and apply it.
Quickly, how do we know?